Okay, folks, I want to give you a violent update on the market and plays. And then I have to talk to you about something big that's coming tomorrow that you're going to need to know about. Let's get right into it, folks. Another rainy day in the overall market with all of the major indices down and tech leading the sell-off. Motivated by, of course, you guessed it, higher rate fears. Sometimes it feels like we are stuck in permanent Groundhog Day. And I snapped a picture of the groundhog and this is what he looks like. Don't let him bite you, he may or may not have rabies. In terms of this lovely morning, we do need to touch on some big catalyst plays. The first is Veru. Veru. V-E-R-U. This is a stock that ended up being a huge hole-in-one. Shout out to everybody who played this successfully, whether you found it on your own or with us. This play certainly doesn't come every day, so give yourself a huge pat on the back if you found this. For context and some tips on how you can find this in the future, we briefed on this one at about 5.97, 30 minutes prior to market open. It ended up running to 14.57 at highs, which is almost a 3x in under 3 hours, which is pretty solid. Later on, it ended up trading to this point. So why did I like it? Well, because it was pretty. Number one, it announced its oral COVID-19 treatment showed a statistically meaningful reduction in deaths. I felt that based on how big of a catalyst this was, that it deserved more momentum. Number two, I liked it because it showed proof of concept. When I was scouting out plays in the pre-market this morning, I saw that it had already shown ability to react to this catalyst. It had an original blip upward at pre-market open, aka proof of concept. I expected later on when market finally opened that you'd get a lot more volume flowing in and people would realize what had happened and what this release really meant. And all of a sudden you get a lot more hypey, spiky. That did end up being the right conclusion. Number three, and I touched on this in the briefing as well, it had a very interesting momentum cycle on Friday in the after hours. We saw this really strange volume increase into close Friday and then this huge spike in buy orders at close bidding up prices, which pumped the price massively over the first few minutes of extended hours trading during that time period. Now, if Veru was more heavily traded and it did something like this every single day, maybe I wouldn't have thought much of it. And call me a conspiracy theorist if you will. But if you look at the past, Veru very rarely sees this kind of buying pressure into the extended hours, yet the market day before that this company releases a massive news catalyst that causes the stock to rally like 200+%, all of a sudden you see this suspicious increase in buy orders right into the after hours and you see a massive increase in volume towards close. I don't know, folks, doesn't smell like a coinky dink to me. If you're going to speculate, it looks suspicious. Who is to say that something didn't leak about this beforehand? Because the company and all the people in the company probably knew about this before the weekend closed. I don't know, folks. Again, just a hypothetical and an opinion and a speculation. But that was one of several main flags that set off the Charlie Dar this morning, the Charlie Radar. Now, I also want to highlight Iveda, which was a little bit more of a complicated play. This is a stock we briefed on because they announced they were launching the Smart City product and getting a lot of attention and media coverage in the pre-market on that. Combining that with the $36 million market cap, it was pretty clear that this wouldn't take too much to run. This was a fascinating case study, though, because it teased pretty much all day with several fake out attempts, then it tests a change of direction here, holds that, and you get a confirmation of price strength, and it runs pretty cleanly from 304 to 487. This one, there's a lot less margin for error than with the Veru trade. But when you get these catalysts in the morning, you don't know whether or not it's going to give you a lot of margin for error. So whether you're trading something that ends up like a Veru or like an Iveda, you still have to have concrete entry and exit plans. Okay, next, in yesterday's video, we talked about how one of the biggest setups heading into this week is Aterian. My prediction was you'd see a pop early on and then a sell-off, and then what you wanted to watch was where that sell-off retained value and found some lovely support. You did get a few attempted pops at pre-market open and then right after market open, but nothing crazy before the sell-off. I was projecting that you could fall as far as 392 and still have Aterian qualified as a momentum play because it held onto enough of its previous run. And it did actually bounce right off that 392 level and net, and in effect, it's repeating that pattern we saw last time where it rallied huge and then sold off the next few days, but maintained most of its previous rally. That said, how this trades tomorrow is either going to be a qualifier or a disqualifier. Now that we've hit that retaining process, you have to watch very carefully to how it reacts now. If it bounces and attempts a new high, fantastic. If it retains value here and bounces on, say, Wednesday or Thursday, fantastic. But if it breaks back below and removes the rally we had last week, it'll be a lot harder to restart that momentum again, especially in this overall risk-off condition that the market has been fighting so far this week. Last week, Aterian was able to fight off the risk-off rally. This week, it's going to have a bigger test. Now, it seems like more people are aware of this stock, and you've also had a little bit of bouncing into the after hours today. So there's certainly some indication that Aterian will be able to fight off this downtrend. different. This is a situation where shorts are incredibly hungry. They're hungry little hippos. And if you think for a minute that they're not going to try to save their biggest attacks for when the broader market starts selling off and weakening everybody, then you've got another thing coming. Short interest did increase today. You've had cost to borrow continue to go through the roof, and utilization is still at 100%. My guess is that when failures to deliver are reported, you're going to see a lot in this stock. But the question is, will this be able to retain value where it actually puts short sellers in a bad situation? Right now, it's still kind of a children's game to short sellers. They're like, oh, we're playing with a bunch of babies. They think in the next couple weeks, this is going to go down 70, 80, or 90%. That's why they're paying cost to borrow fees that are through the roof. If they end up being wrong, they're going to have a massive ricochet effect. And that's what I'm looking here with that retaining of value. I don't really want to see that retaining of value die and then have to start it up with a new momentum wave. In other news, SST ended up bouncing today and is reattempting upward. We'll see if the setups on that one continue as well. My conditions yesterday in yesterday's video were to see SST attempt a breakout early on this week, and it's on its way to doing so. It bounced off very solidly over our directional SMA, and hey, the technical setup's not bad right now. Not only did it go up during a massive risk-off day for the market, but it's also retained a lot of its previous runs. Usually when you have an insignificant run that doesn't take you to a new breakout level or doesn't recover a previous downtrend, that usually tends to predate a move higher. We'll see if that trend continues tomorrow. I think that you probably need to see this breakout before Wednesday if you want SST to still be in the running for a massive breakout. I think that over the weekend, this isn't going to be something that's still talked about unless something big happens. And again, Friday, it's closed for a Good Friday. In terms of the full list of catalyst plays from this morning's briefing, here it is. I know that a lot of folks see value in going through the list and seeing what it is that I look for, how I identify it, and then different setups that I see as bullish or bearish. So here is the full list of that morning catalyst section. I do believe that many of these names will likely reappear this week and in future briefings and runs. That's usually how it works. But anyways, moving on to what is coming tomorrow. Well, the infamous monthly CPI report will be out tomorrow at 8:30 a.m. Eastern Time. This will cover the month of March. And the White House is already trying to get ahead of the story by saying it expects inflation to be extraordinarily elevated in the newest report. Now, what do we know so far that happened in March? Well, you entered March 1st at over $100 a barrel, and on the 7th, you hit a peak at just under 130, and you ended at around $100 a barrel. Into April thus far, you have seen a slight breather in oil prices, and that has been reflected in prices at the pump as well. But again, this report will be for March. So you'll have all of the pricing pressures of people in peak panic mode paying peak prices. Obviously, March was also a period of time where you had the brunt of a lot of escalating sanctions. Russia invaded Ukraine in February, but you had some of the biggest escalations of sanctions in March and some of the biggest peak fear in March. And that resulted in a ton of global ramifications for global prices. In fact, if you look at just food, the Food and Agriculture Organization of the UN put out this report that showed that global food prices skyrocketed from February to March. Overall, the index went from 141 to 159, which is one of the biggest jumps we've seen in a long time. That's like a 13% jump. But if you're looking at it by category, you had meat, dairy all jump up, but then cereals jump from 145 to 170, which is a 17% jump. We know that Russia is a big exporter of wheat. That could have been one of the motivating factors. Vegetable oils jumped from 207 to 248.6 in the index, and sugar jumped as well quite a lot. If you look at the Charlie Food Index, aka Chipotle, analysts at KeyBank estimated that Chipotle has so far significantly raised its prices at around 760 of its 2,997 stores. And specifically, steak is up 6.2% from November 2020, which of course is what I always order in a burrito bowl. And to be completely frank, the Chipotle guac has already been outrageously draining my wallet since before this broader economic inflationary problem was even a thing. Not sponsored, I'm just saying. When you're seeing these price increases in essential for life food producers like Chipotle, where there's literally no other alternative except for complete starvation, you know things are getting rough. That's called a fact. But anyways, going back to the CPI report, to think that this went up 1% February to March, and it's probably going to go up more than 1% March to April, is pretty insane. Obviously, energy segments, which saw huge increases, 3.5 to 7.7 last report, still haven't had a chance to report the massive increase we had in March, so these should be hot as hell. You should see some really insane numbers in these categories tomorrow. I do think that on the bright side, if there is really any bright side, that used cars and trucks may have come down a smidgen. I've seen some reports of demand shifting in these segments a lot. A lot of people are deciding to just delay their purchases of cars, and the more that interest rates rise, the less people are going to be able to afford to even buy a different car. So over time, I'm not super bullish on the prices in the used cars and trucks or the new car segment. But at the same time, there's still a big supply shortage, so I wouldn't expect a massive cool off. You're probably going to need another 6 to 12 months. But in terms of everything else, I mean, you have your transportation services, your shelter, your medical care services, and overall services are likely going to continue seeing upward pressure motivated by rising input costs and rising cost of doing business in a world with skyrocketing prices. I think one of the areas that we haven't really seen as much inflation as maybe a lot of people would have expected is shelter, and I think that's going to change. Real estate prices overall to own real estate have gone through the roof the last 2 years. Rent hasn't really caught up to that yet. That tends to be a little bit more sticky and doesn't move up as fast as these other categories. I think that actually has some catching up to do, and that's going to squeeze a lot of Americans. Sure, if you're signing a 1-year lease, maybe you're locked into that rate for a year, but it's easy for landlords to go and raise your rent month over month afterwards, or at least give you a new lease agreement where the rent is substantially higher. It just takes a little bit more time to reflect that into the data. So in other words, I'm not expecting a fun report tomorrow, and I don't think many people are. We should see another new high. A lot of analysts are expecting it to hit as high as 8.5% year over year. Pretty sizable jump from the 7.9% insane report we had last month. That said, there are a few silver linings here. One is that the market is expecting a really hot report. The main items in the energy sector and the food sector, people know they've been very hot. Again, people are expecting an 8.5% rate. We could get a moonshot to 9 or even above 9, which I think that would really panic the markets. But if you get 8.5 or 8.4 or 8.3, I think the markets are going to be like, yep, that's expected. But when you start getting higher than that, that's when it's like, okay, the standards were so high and you exceeded those. Jesus! On the flip side though, because energy prices have come down into April and that's translated to the pump, and you've also seen a lot of cooling off in demand in a lot of different segments and people being a little bit more conservative with their dough, I would expect this peak from March to be at least a short-term peak. Maybe tomorrow we get 8.5 or 9%, but then for the month of April, you're reporting like 7.5, and then for the month of May, you're reporting like 7 or 6.5, and then it starts going down slowly. I don't think it's going to drop from 7 to 2% super fast. I think it's probably going to go down a decent amount so that it kind of cools off, but it's still going to be fairly hot. Maybe it gets stuck at like 5%, and then it's very stubborn to get down. If you look at history, it seems to be that's what usually happens. It doesn't just keep skyrocketing, but it just stays stubbornly high, and that adds up month over month over month. But at least if the skyrocketing pace of inflation calms down, that's one thing behind us. But anyways, overall, I mean, it's very frustrating to have to deal with the same thing over and over again, month after month after month after month. It's very confusing for investors. It's very frustrating for businesses who have to deal with rising input costs and now slowing demand. It's terrible for everyday consumers. And while this too shall pass, who knows when it will pass? My suggestion to you is just to be stoic and focus on what you can control and focus on what is working right now. And there's really 3 big things that are working right now. Number 1, short-term catalyst trades like Veru, which we saw this morning. Number 2, deals on long-term conviction plays. Number 3, trades on volatility indices like UVXY and SQQQ, which track volatility and fear, and also short the NASDAQ in the case of SQQQ. UVXY was up 8% today. SQQQ was up another 7% today. And the beauty of these is, of course, you can be direction independent. With panicky market days, you can play uptrending in them. On euphoria days, you can play the inverse of them, which is TQQQ and SVXY. That's one of the big pros of having not just a long-term approach to the market, but also a short-term one, because it doesn't mean that you just have to sit on your hands during these overall volatile market conditions. Because as you know, whenever there's volatility, there's opportunity. So that's one of the big advantages of having a focus on trading to some extent instead of just kind of buy and holding. And it is what it is, and that's why I think a diversified approach to the market is one of the best. Anyways, folks, that caps off today's video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you're looking to learn how to trade with our step-by-step lessons, our private chat, daily morning briefings, as well as our full price target list, I'll put a link to ZipTrader U down below. Use coupon code NEVERGIVEUP before April 30th if you want to get a sizable discount. We're also going to be raising the course price for the second time since launch after that April 30th expiration. So now might be a good time to check into it. Lifetime access for one-time fee. Have a good one, folks, and I'll see you in the next video.